All right, the topic we are discussing in this video is break-even point. Many students, many of us have a question about how to calculate a break-even point. So I'm not going into any theory. When we make a feasibility report, see there may be two situations. One situation is that we have number of units sold, the price per unit. So we can multiply it, or we have variable cost per unit. Fixed cost is never per unit because it is we can calculate it, but it is superficial thing, like fixed cost is fixed cost. So when we have variable cost per unit and the price per unit, we can multiply it and we can calculate the total sales and total variable cost. So what I'm doing is I'm discussing break even point based upon the total variable cost, total sales. Okay, I'm not taking price per unit and multiplying it, because sometimes it is difficult for students. They make a balance sheet, or sometimes this is difficult for anyone, everyone. Like, they put a lump sum amount, like this much of sales we will do, this much of expenses, and this much of profit and all. Now whatever I have highlighted in yellow is the master formula. Master formula says S stands for sales. I can write S is sales, P slash V is the PV ratio. PV ratio is profit volume ratio, but this profit is not exact net profit. Okay, so don't get confused with it. This, its name is profit volume ratio, and this P and V are combinedly used. So you cannot say that P divided by V or something. This is called a PV ratio, profit volume ratio. You can say it like this: volume is sales and this profit is only sales minus variable cost. So which is not the net profit, because net profit is sales minus variable minus fixed cost. Okay, so don't get confused with it. Use it as it is, right? Now next is BEP. The term I have used is break even point. Now this break even point is in the terms of amount, rupees, or sales. Okay, break even point is also break even. Sales is also a sales. So we can say it is a break even point which is in the sales, total sales, okay, in rupees. Now you see that whatever data you have, it is very easy to calculate break even point. Now let us say I have this data, this particular, so I have applied some formula also. I will tell you each and everything in detail. Now you have a fixed cost, suppose 20,000. You have a variable cost of 60,000. You have a sales of 1 lakh. Now it is very simple for anyone to calculate the profit. How will calculate the profit? I have written profit slash loss. If it is loss, it will come in minus. If it is profit, it is plus. Now 1 lakh, you can see in the formula, B4 minus B3 minus B2. It's not a rocket science, very simple. 1 lakh minus 60,000 minus 20,000, so it is 20,000 is the profit. Okay, now what is BEP? BEP I have calculated 50,000. Now this is what I will tell you how I have calculated. So let me delete it once. Now I will tell you how I have calculated the profit. Okay, sorry, BEP. Okay, now this is some experiment I have done with this formula. So if, let's say, if there is no profit, how this formula will look like? Profit may be zero also. Then also you can calculate sales. So S multiplied by PV is equal to F, where there is no profit, no loss, and that is what the break-even point is. So I can rewrite this formula in this way. Say this way: BEP, BEP is sales only, but when there is no profit, no loss. So BEP multiplied by PV ratio is equal to F, which is fixed cost. Okay. So what is the difference in these two formula? Sales has converted into BEP and profit has been converted into zero. So no profit, no loss. So only F. Now apply this formula here. How would you apply this formula here? Is equal to, if you want to calculate BEP, so BEP will be, this is derived from this formula. This side PV is in multiplication, that side PV will be in division. Okay. So we know basic mathematics. BEP is equal to F divided by PV ratio. Clear? So now what is BEP? F is fixed cost, 20,000 divided by PV ratio. This. How do we calculate PV ratio? Let me tell you, because I am not told how to calculate PV ratio. PV ratio is, let me write here, is equal to sales minus variable cost divided by sales. Okay, so that also we can do here. Sales minus variable cost divided by sales. Let's say here I delete it, is equal to sales minus variable cost, and I divided it by the sales itself. This is 0.4. So this is calculated as 50,000. My BEP is 50,000. Now I will also upload this worksheet in my video so that you can download it and you can fill your figures and you can do it. Now then we did an experiment. I've done an experiment, and after that experiment I have found, if suppose now you have a figure. Generally when you make a balance sheet you have few figures. Now what is a figure? You have sales, you have fixed cost, and you have variable cost. Okay, so if you have these three figures, you can calculate very easily whatever I have told you. You can calculate very easily the PV ratio, and then you can calculate the BEP. These are the two calculations which we have done. Calculating profit is I think a fifth, sixth standard student can, fourth student, standard student can do it. It's very easy. Okay, now let me delete this. This thing is extra. Now, suppose you want to do any experiment with any existing data or anything, you can do that also. Suppose, for example, my sales is 50,000. This is 50,000, and I want to know whether this figure is correct or not. This is BEP, na? Let us test it. So I have done an experiment. Fixed cost is 20,000. Variable cost is 30,000, which I don't know. Suppose I know fixed cost and I know sales. Now what should be my variable cost? My variable cost, because there is no profit, no loss, so my sales is equal to sales whether it is BEP or not. I'm just testing whether it is BEP or not. How do I test it? At this point there should be no profit, no loss. Okay. So variable cost should be 30,000. So that 30 plus 20 is 50. So there is no profit. There is no loss, right? It comes 30 or not, that I have to prove. If it comes 30 with the same profit volume ratio 0.4, then my question is right. So my BEP is right. Now what is the formula to calculate variable cost? Variable cost, when we have in our hands the sales and profit volume ratio. So formula is sales minus sales multiplied by PV. Okay, sales minus sales multiplied by PV ratio. Let us do it. So what is my sales? 50 minus, I'm sorry, minus sales multiplied by what is PV? 0.4. So we can do one thing. We can check here, so that this is 30,000. So which means that the things are correct. Now you will be surprised to know that I have derived each and every formula written here, except this, even the PV ratio formula, from this formula. PV ratio we should know, sales minus variable cost divided by sales. Our PV ratio will be calculated. Profit and loss, we know how do we calculate it. Break even, now I have told how to calculate. I have used Excel because right now my that writing pad and all, it requires a lot of time to set up. Otherwise, on pen and paper, you can simply do it. It's just not a rocket science. Okay.